What's going on with Silencio right now? The chart sits deep in the lower ranks, volume is thin, sell pressure has dominated much of the recent action, and yet you'll still find people arguing this thing is somehow undervalued at these levels. How do those two views even sit together? Let's talk about it. It's occasionally back in conversations because of the DePIN and real world data narrative, the focus on AI and robotics use cases, and the simple fact that any project trying to turn everyday phones into sensors still draws attention in a market that remains interested in decentralized physical infrastructure. If this is useful, hit the like button, subscribe if you haven't already, and leave a comment with your honest take on SLC. I actually read them. Looking at ratings and signals, almost everything leans negative to strongly negative. Algorithmic scanners, community sentiment, and pure technical tools have little positive to say about microcap tokens with this profile. There is virtually no traditional analyst coverage, so most of the ratings come from chart based systems and on chain observers, and those stay defensive. Short term outlook from the technical side remains weak until price can actually build higher highs and higher lows with meaningful volume, something these tokens rarely sustain once the initial wave of attention fades. On the technical side, the bigger picture for a token this far down the rankings is typically a short, sharp run followed by rapid cooling or long periods of quiet. Price action tends to be highly illiquid, with large percentage swings on relatively small volume. Any upward moves often get sold quickly, and support levels are fragile because there simply isn't deep buying interest. Momentum indicators, when they can even be read reliably on such low liquidity, usually spend long stretches in weak territory. Short term, any bounce looks like a low liquidity reaction rather than a genuine trend change. You can argue that at these ranks, the downside is limited by lack of interest, but the chart itself shows the classic pattern of a token that has already lost most of its initial heat. Silencio is a decentralized physical infrastructure network focused on crowdsourcing hyper-local noise data. Users contribute anonymized noise level measurements from their smartphones and earn rewards, while the aggregated data is intended for AI models, robotics, smart cities, environmental research, and other applications that need real-world audio intelligence. SLC is the native token used for rewards, access to data, staking, and potential governance and buyback mechanisms. It currently ranks far down the market cap list with a circulating supply in the tens of billions out of a total around 98,100 billion, and the price has been trading near the levels you are seeing after a significant decline from earlier highs. That's the classic trap. The technology story still sounds forward looking on paper, the protocol still exists, but the market has already moved on and treated it as largely irrelevant. Retail often gets trapped exactly here, buying the real world data and AI will matter argument, while the larger trend stays quiet and attention stays elsewhere. Here's the real debate. Is SLC actually undervalued at these levels, or is this a classic value trap after a short-lived or long-faded narrative run? One side points to the real-world data collection model, the DePIN angle, the potential demand from AI and robotics for ethically sourced noise data, the low absolute market cap, and the idea that any renewed attention on decentralized data networks could send forgotten names higher. They argue that at these ranks, the risk reward looks asymmetric if attention somehow returns. The other side says look at the history and the market structure. Tokens built around early DePIN or sensor network narratives often struggle once the initial hype cools. Volume is low, mindshare is minimal, and there is no strong visible catalyst that would reverse the decline. Risks are extremely high, volatility is extreme because liquidity is so thin. A small amount of selling can move the price a large percentage in either direction. Downside is theoretically limited by how low the ranking already is, but in practice these tokens can keep drifting lower or go completely quiet for long stretches. Retail traders love the long-term DePIN and real-world data story and end up holding through multi-week or multi-month declines. Thin liquidity means exits can be difficult, and any remaining larger holders can still pressure the price. There is also the structural risk that comes with early stage data networks. The narrative has to translate into real usage, real data sales, and real demand for the token. Otherwise, it simply fades. Bull case versus bear case is stark. Best case, the DePIN and AI data narrative gains genuine traction. Silencio sees real adoption of its noise data marketplace, and broader market risk appetite returns to sensor and data networks. In that scenario, you could see sharp percentage moves higher simply because the market cap is tiny. Worst case is the more common path so far. Volume stays low, attention stays elsewhere, and the token continues to drift or experience occasional illiquid spikes that get sold. In that scenario, the undervalued conversation just becomes background noise while price remains largely irrelevant to the wider market. Short term, the picture still looks weak and reactive. You would need to see sustained volume and a clear change in market structure before any short term bias could flip with confidence. Longer term, it comes down to whether Silencio can convert its crowdsourced noise data into actual commercial demand and sustained demand for the token. That's the only realistic path that turns these levels into something other than a long term afterthought. Nobody knows which way this resolves. The chart has been weak, the narrative has not yet translated into lasting demand, and the token sits deep in the lower ranks. So the real question is simple. Is this the kind of project that can somehow stage a comeback from the lower ranks on the back of DePIN and real world audio data? Or are we just watching another early stage sensor network token that peaked early and never recovered while people keep arguing about valuation?